Hello, everyone, and welcome to the Peabody Southmere webinar, where in the next 30 minutes or so, you will learn how to keep living the life you love in a home that you own. So don't worry about giving up your morning avocado on toast just yet, or at least not until you've heard from our panel of experts this evening. But before I jump into what to expect from that you're going to expect to see today, let me start by introducing myself. My name's Leanne, and I'll be your host for the evening, and I wanted to kickstart the webinar by telling you a little bit more about Peabody. So we at Peabody have a proud legacy of helping generations of buyers and residents find a place in thriving neighbourhoods, communities and homes for over 160 years. We are simply obsessed with matching people with places that they are proud to call more than just a place to live. We're delighted to be rated excellent on Trustpilot, focused on thoughtful quality design, and we're ever conscious of our social and eco impact in the communities we are part of. One of those communities being Southmere. So let me take you through what to expect for the next half hour. With over 100,000 followers across TikTok and Instagram, I think I've got that right, Joe. Some of you may have seen Joe on social media already sharing knowledge and tips on how to own your own property. But today he's with us to share with us some of those myths and also busting them, especially about how you can really own your home in the current market. Then we're going to pass over to Duran, who will take you through why you simply have to see Southmere this spring and visit us down on site at viewing. And if you like what you've heard and seen, then Steve from our friends over at Talk 24 will round up the session on how to get mortgage ready and what to expect as part of that stage of the buying process. Now, on the other side of the presentations, you'll have the chance to ask any questions, but you can also do that by clicking on the Q&A button down below. So feel free to submit any questions or queries you have along the way. Right, so without further delay, I'll pass you over to Joe.
Thanks, Leanne, and thank you for having me. So hi everyone, I'm Joe, the home buyer coach, and I help first-time buyers understand how to actually get onto the property ladder. And that's what we're going to focus on over the next 15 minutes or so. Okay, so avocado on toast. We've all heard it. Stop buying it and you'll be able to afford a home. But to be honest, your Sunday brunch isn't the reason why you don't own a home yet, and your weekends away, streaming subscriptions aren't the reason either. What's most important is educating yourself and getting a plan in place. Okay, so myth versus reality. Let me run through a few of the ones that I hear quite often. So people think they need to give up holidays to save. You don't need to give them up. Just have a realistic savings plan and maybe trade out Dubai for Devon. They think they need a perfect credit score. We'll touch on this more in the next few slides, but lenders are more concerned with the information held within your credit profile rather than your actual score. And some lenders can be flexible even if you've had a blip in the past as well. People think they need a much bigger income when really what they need is consistent, stable income and control of their credit commitments and years of sacrifice. What you really need is access to better information and to build a plan. So what do you actually need? So there's three main things. Your deposit, so even a 5% deposit works. Your income, which dictates exactly how much you can afford to borrow. And your monthly costs, so understanding your budget and looking at your income and your outgoings. So how do you get yourself into a better position without completely overhauling your life? So first, know your actual numbers. Complete a budget planner, which is actually quite a scary process for some people. Many don't realize how much they actually spend each month. I know I used to be one of them. When you actually go through your budget planner and realize how many subscriptions you forgot about, it's quite scary. Swap some of your spending habits rather than eliminating everything you enjoy. So small adjustments add up without you having to feel like you're punishing yourself. Make progress visible. So a dedicated savings pot keeps you focused and on track. Lots of savings accounts or things like that offer these kind of tools. And honestly, consistency beats sacrifice every time. So small, regular habits will get you there faster than the occasional big cutback. You don't need to stop enjoying your life. You just need to be more intentional with your money. Okay, so before we move on, let's do a quick poll. I'm interested to see what actually is holding you back or what you think is holding you back. So, what's your biggest concern about buying your first home? There's four options on the screen. Have a look and let us know. Let's say about 20 seconds and we'll have a look at your results. So, I don't think I earn enough. I haven't saved enough deposit. I'm worried about the monthly costs, or I don't really understand the process. There's no right or wrong answer. Completely down to you. Okay, bit of a split mixed bag here. Earnings isn't a concern for anyone. I find that quite interesting. I haven't saved enough deposit, 20%. I'm worried about the monthly costs, 40%, and I don't really understand the process, 40%. We're going to cover everything on this webinar, especially the process. So yeah, we will cover all of that. Okay, so next, boosting your borrowing power. Let's look at how you can increase how much you can afford to borrow. So, put simply, the more you earn, the more you can borrow. It's not just your basic salary, though. Things like overtime, commission, bonuses, benefits, even second jobs, they can all count towards your income. If you're buying with somebody else, a partner, a friend, family member, that increases what you can borrow between you. And there's also something called joint borrower sole proprietor, which means someone goes on the mortgage to boost affordability, but the property stays solely in your name. It's a really useful option that a lot of people haven't heard of. And I know that Steve will be touching on this in more detail later on as well. Then there's existing debt, so credit card balances or loan repayments directly reduce how much a lender is willing to offer you. So paying those down before you apply can make a really big difference, things like car finance especially. Different lenders assess affordability in completely different ways, which is exactly why speaking to a mortgage broker is a really important thing to do, especially earlier on in the process. Okay, so credit score. The credit score, I want to spend a minute on this because it causes a lot of unnecessary worry. Your credit score is not the whole picture. So there are three credit agencies, Experian, Equifax, and TransUnion. They all give a different number. So already the idea of one definitive score that determines everything isn't accurate. There's no magic score that you need to hit. What lenders actually look at is what's inside your credit profile. So your payment history, how much of your available credit you're using versus what's available, whether there's any missed payments, defaults, CCJs. The score is just one agency's interpretation of all of that. So check all three and look at what's actually in your credit profile rather than just fixating on the number. We will touch on this in more detail again in a moment. Okay, so your next 30 days, I've got some homework for you. What I'd like you to do is a budget planner and be honest. Don't just round down the numbers or do it from memory. Look at your bank statements and do this properly. Review your credit report, make sure everything is accurate and see if there are any improvements that you need to make. If you've got credit cards, try and get the balance down to 50% of your available limit if you're getting close to your credit limit. This can really help with your credit score and it can also help with affordability too. Avoid any new credit applications in the run up to applying, so no new car finance or buying new sofas for the home you don't have the keys for yet. Speak to a mortgage broker. This is essential. Understand where you are. They can help you look at the figures and see exactly what's possible, what you can afford, and help you build your plan as well. Look at what incentives are available. So things like Peabody's deposit boost, which will be discussed later. There are a lot of available schemes, especially with new build properties. None of these things require you to stop living your life. Okay, so back to where we started. The life you love and the home you want, they're not mutually exclusive. You just need the right plan. Thank you very much for listening. I hope you found that useful. And now I'll hand you back to Leanne.
Thanks, Joe. I found that super helpful, especially just the idea of looking through my own budget planner and just how many times Uber Eats will probably appear on there. So I
Yeah,
will
yeah,
take
it
note.
happens.
Absolutely, absolutely. Right, Duran, let's hear about Southmere.
Thank you, Leanne, and thank you, Joe. Good evening, and thank you again for joining today's webinar. I hope you're enjoying it so far, and it's lovely to have you with us. My name's Duran, and I'm the project sales manager. And it's a real pleasure to introduce you to Southmere, a vibrant new residential destination located in Abbey Wood. Over the next 10 to 15 minutes, I'll be taking you through everything you need to know from the development itself and its excellent location to pricing, floor plans, and the high quality specifications it has to offer. Our team will be with you every stage of the journey, from your initial viewing right through to your reservation and then to completion. So let me tell you about the destination of Thamesmead and Southmere. Southmere forms part of a major regeneration project that is transforming Thamesmead, close to Abbey Wood Station, into one of South East London's most exciting places to live. This long-term regeneration represents a £9 billion planned investment over the next 30 years, delivering around 20,000 new homes, alongside new infrastructure and new amenities. The wider master plan includes several phases of high-quality new apartments, complemented by a strong commercial offering that will further enhance the neighbourhood. One of Southmere's standout features is the incredible green and blue spaces, with 280 hectares of parkland, over 7 kilometres of canals, 5 lakes and 5 public parks, and around 65% of the area is owned and managed by Peabody, ensuring long-term stewardship and ongoing investment in the community. In my opinion, Southmere truly stands out as one of the best places to buy in London. If I was searching for a property myself, it would absolutely be high on my list. So we have another brilliant poll. What matters to you when looking for your new home? Is it good transport links? Is it your affordability and monthly costs? Lifestyle and surroundings, i.e. the green space, shops and restaurants, etc. The size, layout and quality of your new home, or the long-term value? And let's give you around 20 seconds to see what you think. And again, there's no wrong answer. Very interesting results. So a lot of people are looking at their affordability and monthly costs, which will be discussed later with Steve Gale. Lifestyle, very important to everybody. And I'll explain again about the lifestyle at Southmere. It's amazing. And the long-term value and growth potential is brilliant. And I'll definitely discuss that in this webinar. So, as you can see on the screen, this location of Southmere, with Canary Wharf and the City of London visible towards the top of the image. On the left-hand side, you'll notice Abbey Wood Village, home to the much-loved Abbey Arms pub, a great local spot serving Sunday lunches and pizzas throughout the week. Of course, Abbey Wood is also where you'll find the Elizabeth line, which is within a comfortable 10-minute walk from the new apartments, offering excellent connectivity across London. These homes are ideal for families, with parks close by and a good selection of schools in the local area. Now at the heart of the development is Southmere Lake and Southmere Park, a beautifully revitalised green and blue space that creates a genuinely peaceful and relaxing environment for residents to enjoy. Now currently we're selling Southmere Phase 2, which offers a collection of thoughtfully designed apartments. The development has been carefully planned to deliver modern architecture, landscape communal spaces, excellent residence amenities, and a strong sense of community. Residents will be part of a vibrant new neighbourhood with a fantastic range of on-site amenities, including a restaurant, cafe, a public library, GP and dental surgeries, and a 24-hour gym, and a convenient local store. Everything is right on your doorstep. You can also see where future phases will be. So when we finished with selling Phase 2, eventually there will be a Phase 3 and 4, which will combine 6 and 7 phases together. And there's a big regeneration of the whole of Thamesmead in the future coming. Let me tell you about the transport links. And as we've touched on already, one of Southmere's biggest advantages is the proximity to the Elizabeth line at Abbey Wood. From here, residents can reach Canary Wharf in just 11 minutes, Liverpool Street and the City of London in around 17 minutes, Bond Street in approximately 25 minutes, and Heathrow Airport directly in 50 minutes, making both local and international travel seamless. There is also wider connectivity with easy access to Thameslink services at Abbey Wood and the DLR at nearby Woolwich, which offers a quick route to London City Airport and perfect for convenient weekend breaks. This outstanding transport connectivity has made Southmere increasingly popular with first-time buyers, home movers, and investors alike, all looking for a well-connected London location with strong long-term potential. So more than meets the eye, we're offering a range of 1, 2 and 3 bedroom apartments, as well as duplexes, with prices starting from £355,000. And homes available to move into this summer, so they won't be long for you to wait. The kitchens and bathrooms are beautifully finished, with buyers able to view 2 contemporary colour palettes, either in green or blue, depending on which building you purchase in. Kitchens have been thoughtfully designed with high-quality specifications and fully integrated appliances, while the living spaces benefit from large windows, flooding each home with natural light and offering attractive views. Every apartment also features generous private outdoor space, creating a home that's perfectly suited for relaxing, working from home, or entertaining friends and family. Time to unwind. Residents at Southmere can enjoy access to an excellent range of amenities, including a 16-hour concierge service and a stylish residence lounge, the perfect place to meet friends or catch up with work in a relaxed setting. There's also a number of communal and privately dedicated working spaces, along with a bookable meeting room, making working from home both flexible and convenient. And when it's time to unwind, residents can enjoy the snug cinema room, ideal for watching a blockbuster movie or catching the big match or any sport you enjoy with your friends. And finally, welcome to your very own entertainment room within Skyline. This welcoming communal space offers a selection of fun games, all complemented by beautiful views, create a fantastic environment to relax and socialize. I can't wait to see it. So, afternoons you can while away. Southmere delivers a rare balance of calm lakeside living, extensive green space, and exceptional connectivity, making it one of London's most desirable locations. There is even a boating centre that's going to be built on the lake, so that if you would like to take a paddleboard out on the weekends or cycle around the parks, it's the perfect location for you. So home prices at a glance. We have 1 bedroom apartments, which start from £355,000, 2 bedrooms starting from £460,000, and 3 bedrooms starting from £650,000. We also have 2 bedroom duplexes for sale, and larger and premium plots will be priced accordingly. As you can see from this slide, the monthly service charges are very affordable compared to other developments, and we offer brilliant facilities for the residents. So you have more for your money when you buy at Southmere Development. In terms of the pound per square foot, as you can see, we're looking at £668 per square foot. Compared to Canary Wharf, in terms of your affordability and excellent value, this is definitely the best development to consider to purchase. And when you're looking at the City of London, prices are a lot higher as well. So definitely come to Southmere if you haven't already been. and we will be delighted to look after you. And why buy new, I hear you ask? In terms of new build properties, they come with a range of benefits. With a wide choice of homes available, and all properties are designed to be energy efficient, helping to reduce the running costs and the environmental impact. Each new home also benefits from a 2-year internal defects liability period, giving reassurance during the early years of ownership. In addition, a 12-year NHBC warranty provides long-term peace of mind, all meaning lower maintenance costs and fewer unexpected expenses compared to older properties. The scale of regeneration taking place in this area gives Southmere excellent potential for long-term price growth. And we have a current incentive, which I'm delighted to introduce this evening, called a deposit boost, where we can contribute 5% of your purchase price towards your deposit. If this is something you would like to take advantage of, which I'm sure you would, simply let us know at your viewing of your private sale home, and we'd be happy to discuss it as part of your purchase. When comparing pricing across London, it's clear that Southmere offers outstanding value. Southmere similar new build homes in Canary Wharf come at a much higher cost and price in the City of London even higher. So when you're currently renting, if you're currently renting or looking to step onto the property ladder, planning your next move, now is the time to discover Southmere with an excellent choice of beautifully designed homes, strong connectivity at far more affordable pricing. This is a rare opportunity to buy your new home in London. We'd love to welcome you for a viewing and help you to take your next step towards your new home at Southmere. So in closing, from tranquil lakeside views to walkable green spaces and a thriving community, Southmere allows you not only to maintain, but to truly elevate the lifestyle that you love. And thank you. I'll hand you back to Leanne.
Amazing. Thanks, Duran. I love the idea of just sitting on a balcony, looking out to the lake, whilst my other half is watching Arsenal play downstairs in the cinema room. All that really affordable, surprisingly affordable value for service charge, which goes back to what people on the call were saying around really looking for that affordability piece. I guess there's a value element to it as well, right? You get all that for that service charge amount, where all that amenities included. Just a reminder for people that have joined the call, we do have a Q&A section that is open. So please feel free to ask any questions or queries that you may have along the call. We'll have a session at the end of the Steve's presentation coming up now to answer those questions. So over to you, Steve.
Thank you, Leanne, and thank you for inviting me on here tonight. And yeah, so my name's Steve. I'm one of the directors at Talk 24. We are a new build mortgage specialist. So hopefully my bit will be sort of demystifying the mortgage side of things. I'm actually going to start with a poll just to be a little bit different. So how confident do you guys feel at the moment about understanding your mortgage potential? So very confident. I know exactly where I am. Fairly confident, but still have some questions. Somewhat confused and I have a lot of questions, it's not a problem, or completely lost and it feels overwhelming. So I'll give you a few seconds there. Absolutely any of those are fine, of course. It just gives me a bit of a guide as well to know where and what I can concentrate on. So we'll give you all a 15-20 seconds or so to click some buttons, and then I'll be able to go through my slides and hopefully answer some of those questions. Okay, I've got some work to do, that's good. So if you're confident, 18% fairly, but a number that have got some questions, which is great, that's why you're here. So fantastic. So what we'll do, we'll move on to my slides as far as what I'm going to look at for you. What I'm looking to do is start off with a little bit of an overview of the current mortgage market and the available opportunities. Going to touch on mortgage rates, where they are at the moment. Going to look at approximate costs of owning at Southmere, go to the specifics. I think a number of people wanted to know what it actually costs to live there, what it costs for a mortgage, so we'll look at that. And then I'm going to move on to a bit that you can get involved in and get yourself mortgage ready. Some of the bits that Joe touched on, I'll also be elaborating on as well, but that will involve things like talking about what deposit you need, how much you're able to borrow, and again, highlighting on that credit report and why it's important. And then I'll be finishing off with a couple of myths, a couple of things that are misconceptions in the mortgage side of things. And then also lastly, just looking at some opportunities, some ways of buying that you may not have thought of. So starting with the mortgage market itself, there's a lot of press at the moment around mortgages and interest rates. What I do want to say is banks and building societies are very keen to lend. They're in a very strong position. They're very happy to lend at the moment. And they're lending now more than they ever have against your incomes. Their multiples are greater than they've ever been. And they're now lending at higher loan to values, which is great. They are quite innovative in some of the things they're doing. Duran touched on the efficiency of new build properties. So lenders have caught on to that. They realize that your bills, your running costs are lower, and have got mortgages where the rates are slightly lower, because more money could go to a mortgage because you're paying less on bills. So that's something where new build really has a big win. Deposit matching is also what we've talked about. Southmere are able to match your deposit up to 5%. By doubling your deposit, you're able to look at potentially additional lenders, and you would get more beneficial interest rates if you've got a bigger deposit. We do have a couple of lenders that will do mortgage with no deposit. Rates are not quite as good, but if your income is there and you're paying quite significant rents, like a lot of you are at the moment, it is possible that we can get 100% mortgages. There's even a lender that is thought about things like rent overlaps, or if you need to furnish the property, and they will give you the option to delay your first few mortgage payments. They do add the interest on, it's not free, but it's another innovative way that lenders are looking at now. So very positive from the banks and the building societies as far as where they stand at the moment. So moving on to the next slide is current interest rates as they stood yesterday, or today really. So with the 10% deposit, which will be 5% from you and potentially 5% that Duran's going to kindly give you, we're looking at rates around about 5%. The bigger the deposit you'll see there, the better the interest rate gets. There is some good news though. Even since I've done these slides, we've had a number of lenders introduce some rate cuts. Santander are dropping their rates tomorrow, potentially up to 0.25%. So it's fantastic that rates are already beginning to turn back the other way and starting to drop. So there is some good news on the horizons as far as the rates are concerned. The next slide puts some of these figures into context for you. So 1 bed, 2 bed, 3 bed. Duran mentioned a 1 bed starting at 355,000. So that would need a deposit minimum of 17,750, of which he would match. A mortgage then of 319,500. Rates as at today, mortgage would be about £1,630 on that basis. The rate cut I mentioned, interestingly, would save you about £50 a month. So it's quite significant just with that one cut. And then you can see 2 and 3 bedrooms, how they pan on. Stamp duty is another cost to bear in mind. On a 1 bed property at that level, stamp duty would be £2,750 and would be £8,000 on a 2 bed, etc. So it gives you a bit of a cost perspective there as far as buying at the Southmere development. How do you do that is what I mentioned right at the start. How do you get mortgage ready? Joe touched on it. Credit help with, and I'm going to come back to that in a moment as to how we can work on your credit report to improve things. Avoiding applying for loans, credit cards in the months before you're looking to buy is, as Joe said, a really good idea. You don't want to be borrowing money at the time when you're looking to get a mortgage, and they also do things like credit searches on you, which again we want to try and avoid if possible. The electoral register, if you're able to get on that, does help. When it comes to applying for a mortgage, what the lenders are looking to do is find you. Is they're looking to look at your credit history, and being on the electoral register says, yes, I live here, this is where I am. So anything you can do to show a lender, a building society, a bank, how well you've conducted your credit card payments, your loan payments, is what's going to benefit them in being able to lend you what you're looking to do. Paperwork wise is another way that you can help prepare yourself when you're looking to apply for a mortgage. Digging out your last 3 pay slips, a bit old fashioned now, probably downloading your last 3 pay slips and your bank statements is what we're able to work with. Similarly, things like your identification. What you might not realize is passport's perfectly acceptable, as is a driving license, to identify yourself, because lenders will want you to do that. Just make sure your driving license is at your current address. I've done it before. You move home, forget to update your driving license. So it's another little tip there that will help speed things up when the time comes. So moving on from there, we've talked about documentation and how to get yourself mortgage ready, but deposit is one of the key areas that we need to look at. Starting point is 5%. That is the minimum really we ideally look at when we're looking to get you a mortgage. This can be from your own savings, or it can be a gift from family or friends as well. Peabody, as we've said, in Southmere are willing to match that, which is fantastic. So that really does help you. And with that deposit, it can unlock you a greater choice of banks and better interest rates as well. Now, what you can borrow from a bank, Joe's already touched on as well. Your salary, your basic salary can be used, as can overtime, as can bonuses, commission, benefits, all those sorts of things can be used. We were in a position not long ago, probably 2 years ago, where banks were lending sort of 4 or 5 times your income. That has changed in the last sort of year, 18 months. We've now got banks willing to lend 5.5 times your income quite standardly. We've even got some lenders now going up to 6 times your income, one even at 7. Now, that's not something you may want to do, and I wouldn't say that you have to do 7 times your income, but it's just interesting to know that the ability is there in some cases. It might be that you were looking at a 1 bed, but you could now afford a 2 bed. That's really what those enhanced multiples can sometimes help you do. Now, what you can borrow is affected by any existing commitments you've got. So if you have any existing loans, student loans, credit card debts, those sorts of things, they can affect how much a bank will lend you. But again, talking to a broker like ourselves, we can go through all that with you and work out what your affordability is. Defaults, county court judgments, doesn't necessarily affect how much they'll lend you, but it can affect the lender choice that you have. That's just something to bear in mind. Again, we can talk through that with you. Okay, so moving on to the next slide is the credit report that we talked about. Checking your credit report is really useful. The 3 agencies that were mentioned, Experian, Equifax and TransUnion, they all offer you the option to have a free report. So get a copy of it and check it. Your previous addresses are on it and correct as well. If you have a balance on a credit card, try and make sure it isn't maxing out that credit limit. So let's say you have £5,000 on a credit card and the credit limit's £5,000. That doesn't look so good to a lender because you're at the limit of what you were able to borrow. Spread it across 2 cards. So 2.5, 2.5 looks better to a lender. Close down any credit arrangements that you don't use anymore. Again, it could be old store cards, old bank accounts that you don't use. Just reduces any risk for fraud and all sorts of things that can happen there. And voters roll, we'd already talked about getting on there. Similarly, the buy now, pay laters that are thrust in front of us wherever we go at the moment. I always recommend that you avoid those running up to getting a mortgage as well. They are mini loans in a way. They appear on your credit report. You'll see them on there. So if possible, things like the Klarna, again, just try and avoid those if you can in the months leading up to looking to buy a property. So moving on from there, There are some common myths and misconceptions around getting a mortgage. Some people think, oh, I need to be in my job for 6 months, 3 months. There was a period where lenders would like you to be in a job for 3 or 6 months, but that really isn't the case anymore. Most lenders just need you to have started the job, or at least have accepted a job and be starting it in the next 3 months in a couple of lenders' cases. So it's much more relaxed as far as the insistence that you're in a job and you've got lots of pay slips to show them. They're not so concerned about that anymore. Having some credit blips, having some credit issues in the background. Similarly, that doesn't necessarily prevent you from getting and buying a property. We do have lenders who specialize in that. And again, it's about talking to us, and we can have a look at your circumstances and see where you fit within that situation. Not having a permanent right to live in the UK quite yet. Again, that doesn't necessarily prevent you from buying a property. If you have a visa and you've lived here for 12 months and have at least 12 months left on your visa and normally have at least a 10% deposit, we do have some potential options for you there as well. So just don't think that just because you don't have that indefinite leave stamp in your passport yet that you can't buy a property. So yeah, hopefully some misconceptions there that, as I say, are put right. So just moving on from there, the last bit really I just want to clarify is just buying on your own or buying with your partner is obviously the most common way of buying a property, but there are other ways that you can. Joe mentioned it. It's an option where parents, siblings, even friends in some cases, can join you on the mortgage to boost your affordability. Now, they don't go on the deeds, but you are on the mortgage. It's called joint borrower, joint on the mortgage, sole proprietor, sole owner of the property. You may see things like the NatWest are advertising at the moment, a family mortgage. It's exactly that. So it will be a parent and their child going on the mortgage, but only the child on the deeds of the property. So you don't pay an enhanced stamp duty, and the parent isn't on the deeds, isn't owning the property, so there's no inheritance tax or any other of those liabilities. They are liable for the mortgage, and that would be explained by your solicitor, etc. But again, it's quite a growing way, a popular way of buying a property. It really does help boost affordability. Similarly, buying with a friend or buying with more than one friend. We do have lenders that will allow more than 2 applicants on an application. So that would boost your purchasing power as well. Green lenders I touched on earlier, when the property is as efficient as these are, they often will lend you a little bit more. They'll offer you a slightly better interest rate, or even some things like cashback. Deposit boost as well. We've talked about Peabody are willing to offer this at Southmere, which is fantastic. And the good old bank of mum and dad gifted deposit from family is also a very popular way to help you boost your buying power. Hopefully, it's a bit of a whistle stop, and apologies I've talked too quickly. The next stage really is about speaking to someone like Talk24. Well, we're able to get you an agreement in principle. We're able to talk through your income, your outgoings, your deposit, whether you're worried about missing a credit card payment, whatever it might be. We've got lots and lots of lenders we can look at. We're able to do a check. Often we would look at what's called a soft credit check, so it doesn't affect your credit rating at all, and produce you what's called an agreement in principle. And then that gives you some huge confidence in then moving forward and being able to buy a property. So that's about it from me. I will hand back to Leanne and and take it from there. Thank you very much indeed for your time.
Lovely, thanks, Steve. We've had some questions come in whilst you were kindly presenting. So I will start by one of the ones that came in, which was around credit card repayments. Does student finance count in relation to a debit card?
On a debit card, so student loans, your pay slips would be taken into account, but student finance, I mean, debit card payments normally would be what comes out of your bank account, as it were. So that wouldn't really affect your borrowing, I would say, in that respect, unless you think anything else, Joe.
No, that's what I was thinking. Yeah, I think they're referring to student loans on the pay slips.
Yeah, they are treated, although they're taken out your salary before you're taxed. lenders do take that into account because it is a deduction off of your gross salary. So yeah, they do take those into account.
Right. So they'll look at your credit card, they'll look at your student finance, but it doesn't necessarily mean that that would discount you from getting a mortgage or securing a competitive rate.
Not at all. No, they're looking at the affordability. Similarly, credit cards. If you have a balance on the credit card, but you pay it off every month, again, not a problem. They'll treat it as zero. As long as that credit card is coming back to zero, that's fine. It's just more if you're running a balance on a card, they will then take that into account when looking at your affordability.
Thank you. We have another question that's in the same ballpark of credit cards and debit cards. One of the attendees today have asked, what is the case for those who only use debit cards and not credit cards?
Okay, well done for one. If you're able to do that, that means you're not needing to borrow money. So you're controlling your credit really well, and you're not needing to take credit cards. It's an odd one. As I said in my sort of presentation, lenders look at your history to decide whether they're happy to lend to you. It's like if I said to you, Leanne, lend me some money. You didn't know me, you'd be a little bit unsure. But if you knew my background and how well I conducted myself, you'd be more happy to lend me money. So having credit cards and having loans is your sort of window for lenders to look and see how well you are at repaying them. So I'm not saying run out and get a credit card or run out and take a loan out, but having a credit card and paying it each month does get acknowledged on your credit report. Debit cards don't tend to. Your bank account does. Your bank account, and if you're overdrawn and over limits, it can show on there. But actual using a debit card doesn't really get reflected on your credit report so much. But as I say, I'm not advocating run out and take a credit card out, but that is a way of demonstrating to a lender your control of your finances, really.
Right. So having a credit card isn't necessarily a negative, providing you are up to speed with payments and you are reducing that cost to show that evidence.
Yeah, I'm not Martin Lewis, but yeah, when you take a credit card off, just make sure you pay it in full if you can. Not everyone can, but pay it in full every month. The key is pay it every month. Even if you can't pay it in full, make sure you make that payment. That's the key.
Perfect. And if you do want money lending to you, Steve, just let me know.
Brilliant.
We've got another question. Some questions have come in before the session as well. So one of them for yourself, Duran, was around whether you're just able to explain in a little bit more detail how Peabody will be contributing to the deposit.
Yes, of course, I'll be delighted to explain or elaborate on that. So we can contribute 5% of your purchase price towards your deposit, which is payable on completion of your property via your solicitors. So what happens is when you are making an offer on the property, you would say, I would like the deposit boost to be part of my offer. At the point of reservation, once that's agreed, we would put it onto your reservation form. That would then go onto the contract. And then on legal completion, that 5% deposit would be left with your solicitors. And then you can ask for that deposit to go towards your purchase, or it can be put towards something else of your choice when you are completing on the property. Is that all okay?
Okay, it might lead on to another question that we've also had in the chat, which was, how does cashback work? And I guess how does that differ between the two?
It's quite similar. So if it was a 5% cashback, what happens again is at the point of reservation, when you make an offer on a property, you need to be quite clear as to how your offer would like to be structured. And then if that offer is agreeable, it would then go onto the reservation form, which is then transferred onto the contract. And then legally, at the point of completion, rather than you not getting anything back on completion, if there is a 5% cashback or a smaller amount of cashback being received, that would then be left with your solicitor, and then your solicitor can return that back to you on completion, or you could ask your solicitor to transfer it, for example, towards your stamp duty or towards your purchase of the property, or you could ask for it to come back to you and you could put it towards your furniture, etc.
Oh, interesting. So you could really, I guess the key is really talking to yourself or the likes of Talk 24 just to really understand how to best benefit from either of those two incentives.
I think to jump in there, Leanne, it comes down to whether you need it to buy the property or whether you are able to use it for other things. So I talked a lot, and Joe talked a lot about that money being used to help boost your deposit. If you have sufficient deposit, then it could be given back to you as cash back to choose to do and spend how you like. It just depends in your circumstances.
Brilliant, really useful to know. One for you, Joe, that also came in was around that someone that is worried about their credit score, and they've asked what can they do quickly to improve it.
Okay, so it really depends on what the credit score situation is like that they are trying to improve. So if it's just a standard clean credit report, there's things you can do to improve it. So things like going on the voters roll, reducing credit card balances as much as possible below 50% of the credit limit, ideally, making sure you continue to make your payments on time. But if you've had some more serious issues, missed payments, CCJs, defaults, there isn't really any quick fixes as such. The best thing to do first is speak to a broker to see if there's any lenders that can help you with your current situation. And if not, it's just a case of time heals all. So lenders are more flexible the older these issues are. So if you've had a CCJ or a default, you get past maybe a 3-year mark, then more lenders are happy to consider it. So it really depends on what situation you're at that you're trying to improve.
So again, best thing is to talk it out, figure out what those next steps are that are bespoke and really individual to the individual.
Correct. Yes.
Okay. Another question that came in was around being a single parent buyer, which I guess is a very common scenario that a lot of our buyers will find themselves in. This question is based around essentially, can they still buy? I guess, is there any advice to single households or to single parents with dependents? What type of barriers can be overcome that you guys can advise on?
Sure. Well, we are able to help. Obviously, mortgages are available. In these cases, often it may be that there are some benefits that they're entitled to as well, and these can be taken into account in a lot of cases. So don't think that it's just going to be the income. We can include benefits and things like that to boost the borrowing power as well. So yes, certainly we are able to help in those circumstances.
Brilliant. Some more questions that have come through as well. One of them is from a parent joining the webinar with their child today. They've asked that they just want to understand a little bit more about what steps they can take to help their child get onto the property ladder. I'll throw that one out to all of you if you will have a take on that.
Okay, I'll start. So there's a number of things that you can do. I think number one is if they're living at home with you, to maybe keep the costs of the rent down a little bit, so to help them save. That can be a really good one. The lower their outgoings are, the more they're able to save and put back. We've touched on things like joint borrower, sole proprietor mortgages, so maybe they could go onto the mortgage with them if they already own a property. That would mean that the stamp duty implication wouldn't be there. Teaching them good habits, making sure that they're making their payments on time. It depends how old the child is, that they're looking to help. But yeah, there's lots of things that they can do to assist.
Certainly, the only thing I want to add to that, if it depends, like Joe said, in the form of the help. If the help is monetary, then gift is readily acceptable by everyone. It can even be from overseas. It can be wherever the gift comes in from. It just needs to be a non-repayable, so it can't be a loan. It needs to be denoted that it's non-repayable, that it's a gift, genuine. And then what a lender would do, again, more coming from the lender perspective, they would often just need to see source, if they do their standard checks and things on it. Similarly, if it's coming from overseas, just to check the source. But yeah, gifted deposit, and it's not limited; it's unlimited as far as limit is how generous the parent is.
Yeah, absolutely. So I guess how do lenders know that it's gifted? What would you need to do as a parent to prove that essentially?
We tell them. A lot of the lenders have a template where we fill out, and the parent will sign and say that yes, I am gifting this money. It is a non-repayable gift. They'll sign it. different lenders have different requirements. Some will take that as good faith. Some will want bank statements from the parent saying, yeah, here's the money and here's where it came from. Some want identification. There's a number of checks that the banks, even solicitors, will do around the sort of money laundering side of things that all institutions have to adhere to. But no, very straightforward. One of the most common forms of deposit that I deal with is family gift. So yeah, it is very straightforward as how it's dealt with.
Brilliant. And I think we have time for maybe a few more questions, one of which has been around someone that's very keeping to the theme of the presentation today. They have a few weddings abroad planned and don't want to miss out on them. What usually holds people back most when it comes to saving?
I'll answer this one. So life's always going to kind of throw unexpected things your way, such as, weddings. We touched on the budget planner earlier. So the best thing to do is just add in another section into the budget planner to cover things like unexpected costs. If your car breaks down, some things are completely unavoidable. Weddings and also the stag do or hen party in Vegas that goes along with it. Just make sure that you are budgeting for these unexpected things. The biggest issue that people have is just not having a plan in place, not doing the things that I mentioned in the next 30 days. If you tick off all of those things, really you are in a great position, whatever life throws at you.
That's really good advice. Essentially, just keep living your life, but just make sure that you're aware of what goes in and out.
Yeah, exactly.
Perfect. I have another question that's just come through. So someone in the audience asked, can I purchase a property at the age of 61 because I will retire at age 67?
Yes. We have a huge range of lenders now, standardly lending way past standard retirement ages. We do a lot of lending up to age 75. We've got some lenders that will go beyond that as well. You can look at affordability up to when you retire. So lenders can look at that and then look at projections of what your pension income is likely to be. These are a little bit more complicated, and they're very case by case, obviously. So it would be a case of just speaking to us, and we can look at the options available. But yes, certainly borrowing into 70s and beyond is not uncommon these days, and lenders have woken up to that, and they will accommodate that in a lot of cases.
That must be really comforting to know. I hope that's answered your question for the attendee that put that in the chat. Thank you. We have another question that's coming through. Someone's asked that how does anyone really afford a monthly mortgage of over £2,500 when the average salary tends to be less than that, especially that the amount that you take home after tax? What do people do when they're in that situation?
That's getting a bit political, isn't it, really? House prices and it's a very, very valid question. Don't get me wrong. It is a difficult one. When we're looking at the 3 beds where the mortgage is up at those levels, it does make affordability very, very difficult. There are alternative options outside of that. Duran might be able to, give some ideas on other ways to buy at Southmere as well. That could be an option where the cost may be slightly less. But yeah, I don't have an answer to that question, if I'm perfectly honest, because I see that problem crop up quite frequently. It is unfortunately an issue that we do have on in the UK and London especially.
Yeah, I mean, buying these days, especially as an individual, buying on your own, is so difficult with monthly payments as they are, house prices as they are. And that's why a lot of purchases are joint. 2 people on 35 or 45,000 each suddenly becomes 70 to 90,000 as a household income, which is vastly different. So buying with somebody makes a massive difference. Things like shared ownership can be a good option if you've got limited income.
That's certainly what I was angling at. Yeah, shared ownership would be another option. But you're right.
And also,
we have choices available at Southmere as well as the private affordable homes. We also have some shared ownership options.
Nice.
It's another webinar, though, isn't it?
That's really helpful, actually. in terms of being able to. So there's different routes that people can explore. It doesn't mean that they have to compromise on a home if they fall in love with a location, a home. Actually, there's different routes to potentially owning that. And I guess especially here in Southmere, you've got the two routes.
Definitely. Yes, we're happy to hear from anybody, and we will try and work out the best property to suit your requirements and budget, hopefully.
And I hope that's answered your question in the audience. I do have another one that's more about travel and the increase or impact that will have on values of homes. The question is, when will the DLR propose for Thamesmead or proposal for Thamesmead start, and when will it increase the value of homes? So I guess
I might be able to give a little bit of help on that. So we've been advised that the DLR will be completing around 2032 in the Thamesmead area. It's a little bit further away from the Southmere development. However, as the apartments around the DLR get constructed and then go on the market and get sold, that will help to lift the prices of the whole location. So if you have already purchased a property in Southmere with ourselves, and in 5 years' time they decide to build some new infrastructure within the locality, that should help to boost the value of your property. And that's from experience. Whenever a new development is constructed within in an area that looks lovely, that increases the value of existing properties, if that helps you.
Thank you, Duran. We've got time for one more question, which might need a follow-up, which is just essentially availability at Southmere. So the question is around whether there are houses available or just flats available at Southmere.
So they're all apartments. However, we do have duplex properties available, which is very similar to a house, but inside a block of apartments. So it's situated on 2 floors with kitchen downstairs and bedrooms upstairs. With 2 balconies, and we do have a choice of those available either in 2 or 3 bedrooms. So if you are looking for the feeling of a house, but with all the facilities and security of an apartment, definitely come and see myself and my team, and we will look after you.
Brilliant. That pretty much takes us up to time. I do know there was a slight follow-on from that question around what does the service charges look like. Definitely worth talking to Duran and the sales team, I would say, for that one. And also coming down and seeing if you like what you see. So on that note, thank you everyone for joining virtually and joining us this evening. I hope that this has been very insightful. I hope it's been very helpful. Thank you to our panelists, Joe, Steve and Duran. And if you have any questions after this, please do feel free to get in touch. There will be an email that goes out to you, and also an exclusive offer because you did join us today of £10 shopping voucher and a coffee on us when you come down to view. So do come down and see us over at Southmere. Thank you, everyone. Good evening.
Thank you.
Thank you.
Thank you.